Hey, welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a great day here. This is our quick show that we do. We call it the Closing Beat. Just a fun way to kind of cover the stock markets for the day and just go over the good, the bad, and the ugly, let you know how things are going. No matter where you're watching us, you can actually go to the website, the bottom right-hand corner of your screen. It's called Guess the Dow. You play a little game with us here over the summer where you just guess where you think the Dow is going to close next week. And if you're the closest without going over, Price is Right style, we'll send you $100, $100 gift card, no strings attached. It's not a marketing ploy, no nothing at all. Just, hey, put a guess in there, and if you're closest, we'll let you know. Every Friday, which is tomorrow, we make the announcement who won for the week prior, and well, that's the only email we'll send you, is to get your address, send you the gift card. If you happen to be one of our customers, you're eligible to play as well, and you can choose when you go in there. You can choose to have your account credited the $100, or if you just prefer a little summertime cash, we'll send you that $100 gift card, of course, in the mail. So if you want to play along, go for it. This week coming up here that we're going to report tomorrow is officially the busiest, the most submissions we've ever had for the game. So best of luck to you. Hope you do well. You can take your guess for next week, and we'll see what happens. All right, let's move on. Class tonight, by the way, for our customers. Thursday nights, every night we do a class for customers, try to teach you something new. We call it Wine and Wealth, just a fun sort of way to say, go grab a glass of wine, come hang out with me, and by the time you're done with that glass of wine, you'll maybe learn something new. Very short class, we don't take a lot of your time, and they're always recorded in the dojo, so if you want to go ahead and check that out, you're welcome to come back and watch it at any point. You don't have to join us live if you don't like to. And so other classes are in there as well. Tonight we're going to be talking about Nest Egg, a financial planning software that we give to every one of our customers that want to sort of take the next steps and really dig into their financial plan. Well, today we're going to go through the profile section. How do you set up the basics so that you can really get this thing to turn on and start working for you? So we'll spend a little time on that. I've created a dummy account, Mr. Louis Armstrong, in honor of his birthday here earlier, well, over the weekend, last weekend. So we'll go through Louis Armstrong, his goals, and set up everything in there, have a little bit of fun. The name is Jazz, right? I mean, you can't just pick somebody else. It's got to be Louis Armstrong, right? Talk to me. Anyways, let's talk about the markets. The Dow up 371. Well, that seems like a big number. The S&P added 54, the NASDAQ 176. That also seems like a big number. What happened today? Well, the S&P 500 is officially higher now for the last 3 days in a row, recovered all of Monday's drop. So we had Monday's all that the excitement that we saw there. We've officially recovered all of it and just gone positive for the week by just a touch there. The NASDAQ has done exactly the same thing. The Dow is the only one that has yet to recover from all of Monday's drop, but still very close there. If you like looking at the candlesticks charts, you can see here back above the 50-day moving average and recovering all of it for the NASDAQ there. Every industry group in the S&P 500 was positive today. It was a very broad-based rally. Even defensive names didn't take a break. It was very, very good. Now, here's the thing. I love to be able to tell you ahead of time versus say, I told you this was going to happen, right? If I can give you some sort of indicator ahead of time, I like to sort of point those things out. It's how you learn. It's how you learn to look at things. Every day you pull up whatever app you use or whatever platform you use, there's a billion things to look at. Where do you zoom into and get a feel for your expectations with the overall market? Not always right, but I like to point these things out ahead of time. And yesterday we focused on tech and semis. I said, hey, when the market sold off early in the day, I noticed tech and semiconductors did not. They actually held up. And so we pointed this out yesterday that that's a little bit of a clue right there. That's a good sign if you're a bull that those two really strong sectors make up over 20% of the S&P 500. That's a good thing that they did not sell off as much as the markets did yesterday. They barely budged. So you got XLK that we looked at, and we looked at the SMH to show that thing barely budged. Overall, that's a great sign. Going into today, that was your early support. In fact, those were your biggest, besides metals, those were your biggest gainers on the day. So you had semiconductors leading the way today, tech leading the way today. It's not because I knew any better. It's because traders, the active investors, those of you that go put money to work when you feel it's a good time to put money to work, you go look for strength, and that's where you found the strength. Everybody could look back and say, well, that's interesting. The tech stocks didn't sell off, but the markets did. There's a little hint of strength. And anytime you can pick up on those little things like that, that's always a good sign. We'll cover that here in just a little bit more. But anyways, you got jobless claims out today. They came in lower than expected. They're just historic lows, actually. It was like 209,000 that were just sitting right near historic lows. Not really great news overall, the entire number, but very bullish report that came out today. So those jobless claims hey, if you want a job, apparently there is plenty of places to go find a job. Now, stock market-wise, if we go look and see, all right, what about the S&P 500? What are the expectations going forward? I have to say that you have reached a point here in the market where you do not expect them to be higher tomorrow. You don't expect the markets to just do what they did today tomorrow to wrap up the week, right? Maybe a little positive, little back and forth day, a quiet Friday maybe, even a little pullback would be fine, but you don't expect to wake up tomorrow and follow through with this bullishness, right? And a little hint that you got from that today came from bonds. So here's your hint going into tomorrow. So bonds started to pull back, notes started to pull back, Treasury started to pull back throughout the day, right? Price pullback, right? The rates, you get what I'm talking about. Anyways, later in the day, I can actually just go here. We'll change this to sort of an intraday look at it. Later in the day, you got rates, prices starting to push higher again. Uh-oh. What's going on there? All of a sudden, interest rates are hitting lows, right? So that's your hint going into tomorrow that there's still some negativity out there, and people are assuming this has reached a little bit of a point here in the markets that are sort of extended and maybe due to just take a break or pull back a little bit. So your hint going into tomorrow was that. It sort of showed itself right after lunchtime. Bonds started to rally up there a little bit. It became a focus. Bloomberg started focusing on it, and all of a sudden it's like, okay, wait a minute. Are we really out of the woods here? Are we really recovering? Add that to some technical areas here. You got about a 50% retracement for all you technical traders out there. You have the resistance of the 50-day moving average if you like using that sort of thing. And so with all these things starting to pull together, you go, okay, my expectation for tomorrow is not that we have a rocket ship type day like we did today. You expect to see more dissection in the overall sectors, some lower, some higher. That was me trying to use a fancy word. See what happened there? I'll just go back to what I do. Speak normally. Hey, last week we saw, well, week over week we've seen $25 billion come out of the popular ETFs. It's a metric everybody tracks. 25 billion came out. June and July we saw 75 billion come in. So what is the 25 billion? That's some people moving money to other areas of the market, and that's a lot of retail traders. A lot of retail traders got scared of this market on the way down. What do you think happened today? All those retail traders, you've been there, I've been there. Come on, we've all done this. We've seen the markets fall, and we say, sell. And you sell, wouldn't you know it, the markets start to bounce and you kick yourself for selling those positions, don't you? Come on, leave a comment. You know you've been there. Be honest. So what happens is you have these $25 billion, let's say even half of that was retail traders. You've got half of that coming back into the market going, well, I guess I overreacted. I guess I'll go diving back in, buying at a worse price. And so a lot of that support coming in to sort of help that out. Now, in the S&P 500, you know I'm a numbers guy, and I get a lot of grief for this because people are like, it's historical stats, man, you can't do anything with it. Hey, they play out. So whether you believe in it or not, I like to share them, I like to research this. And you know that on Monday I said, hey, looking back at this, when there's a Monday that has the type of day like it had, greater than 1%, just a big down day on a Monday, after having the week that it had prior, which was essentially a pullback week, there's a 78% chance that 5 days later, right, which is just saying one trading week, 5 days later, the market is higher by 2% or more. Well, today is not technically the fifth day, but we're already up over 2% from those lows. So those stats are currently playing out. Now, when I share this with you, I'm really doing it to set expectations. I'm not doing it to tell you to go buy the market or do something crazy. I'm just saying it starts to build in your head. You go, okay, the markets fell. Historically, they should recover a little. Where we go from here, really, we'll just keep studying as we go. But to know that there's going to be a little recovery puts confidence in your head, right? You can walk around and everybody else is panicking. You can go, well, the stats are I should be okay. Maybe not by as much, or maybe it just bounces a little, but at least I know the odds are on my side for a little bit of a rally. So those stats played out. Now, this doesn't work every time. In fact, Dish, we pointed that out on Monday as well to say when Dish loses 25% off of its highs, no matter how long it takes, 5 days later, it is higher by at least 6%, 88% of the time. So nearly 9 out of 10 times it does it. So I drew a little line here. This is where that started. It needed to get to 36. Today is technically the fifth day. Didn't make it, right? Didn't get there. Now, if you look further, 82% of the 82% of the time, the stock finishes higher than this level right here 1 month later, right? So you still have those stats on your side, but the ultra short term sort of active thing there, it didn't work, right? Bottom line, it didn't work. Now, the people that follow numbers like this and they use all these geeky stats to make their actual decisions, they realize it's a numbers game, right? If the odds are telling you it's a good thing to do, you do it, right? If the odds tell you it's a good thing to do on the next symbol, sector, index, whatever it is, you do it. It's a series of returns, right? It's like flipping a coin, right? You may land on a streak of heads or tails or whatever, but you know basically it's a 50-50 shot, right? So you play the odds every single time. If someone tells you that 70% of the time something's going to happen, you don't want to do it just 10 times. You want to do it 10,000 times because you know the odds are in your favor that it's going to work out. So the active traders really love that sort of thing. This would be one, however, in all fairness, that wouldn't have worked out, at least as of now. Longer term stats, maybe they do play out, but we'll see how that goes. Okay, let's move on to the goodness here. If we look at the Dow, still holding nicely at the 200-day moving average. That's the red line on my charts. I always use a red line for the 200-day. You don't like to see that it was struggling there just a little bit, but all in all, oversold, sort of dropped down to the 200-day moving average. It has acted as support at this moment. And again, I have the same comments here. You don't expect this to be rocket ship higher tomorrow. You expect it to be a back and forth day. You've got a lot of active traders that were not scared of that drop. They bought. They're going to look to go into the weekend taking their profits. They don't want to deal with what Trump could tweet over the weekend or what China could say. Interestingly enough, you notice how there was no tweets today? And overnight, if you follow the Chinese markets, if you happen to not sleep like I do and check that out, nothing from them. Total silence in terms of the trade war. Silence in the U.S., silence in China over there. What do you know? Markets can focus back on earnings and growth and economic data and things that actually move the market in the long term. So kind of interesting there. Anyways, you got the Dow around the 200-day moving average, doing nicely coming off the lows. Disney was one of the big supporters today, 2.25%, still recovering from its earnings drop there. A little oversold in the short term. We talked about Disney and their earnings yesterday. Goldman Sachs said, that was overdone. They upgraded the stock here today, and so that's very helpful. Goldman Sachs talks, people listen, and so you got that. Now, what's not bouncing in the Dow are things like UNH. If you happen to own UNH, you're like, uh-oh, come on now. The markets are rallying. We've got 3 straight days up. What's going on? UNH is sitting there flat. It's in a weaker, sort of out-of-favor sector right now. A little bit of news mixed in there, but you got about a 0.5% gain. That is something people will take notice of, that it is an underperformer. Intel, also an underperformer. It came back a little bit late day, but notice how Intel's staying near the lows, not only in the ultra short term, but look at the entire history here. Go back to September of last year. Intel's really struggling to put anything together strength-wise in any consistency. Oh, did that make any sense? It's been one of those days. All right, if we look over at the NASDAQ, good rally there, of course, recovering from all of Monday's declines. AMD is going to go down as one of your big ones today, the biggest gainer on the day. 16% on the day. They had all kinds of news, right? If you're trying to keep up with this, Google is a new customer of AMD, or Alphabet. That's good news. Twitter says they're going to use the new chip that they just announced and the chip they just announced. So you've got new chip coming out of AMD. Twitter says we can use this to reduce our cost by 25%. That's good news for Twitter. If you happen to look over at Twitter, nice little day for them as well. It's not technically in play just yet with them making the switch there, but that's good news there. And you had Google, or Alphabet, becoming a new customer there as well. Stock's higher by 2.5%. So because of all that good news from AMD, almost gets back to highs. Nobody really wanted to push it to the limits here today to get it back above highs, but that's one of your better performers in there. Also, this came out after hours. During the day, it was still kind of rumored, but this is official now. Broadcom is buying the enterprise business security unit of Symantec. So I'm not sure where everything is after hours here, but Symantec's been a little bit wild. Today gained 12%, basically everybody assuming that deal would be a deal. There's actually algorithms that track rumors versus actual results, and so the algorithms just having a field day with Symantec there. All right, over to the S&P 500. So you know where we're at, you know what to expect, or at least kind of how to set your expectations. Look, best case, I'd like to be wrong. Right, you'd like to wake up tomorrow and see another rocket ship day, but if you had to figure out like what is that highly likely to happen, there's got to be some sort of news event, there's got to be a tweet, there's got to be something to do that. So for anyways, you know where the S&P is at. Monster, what a wild monster of a day for this stock here. Very volatile. They missed on earnings. They were downgraded. by JP Morgan and BMO at the same time. So two companies coming out and downgrading them. Barron's beat up on them in a rare sort of out of the weekend article saying the innovation for this company and focusing on beating out competition is just taking too long, that they're not moving fast enough. So the stock started lower on the day. People came, found that as a great discount. The stock finished higher by 3% on the day, so not too bad there. All right, sector-wise, we talked about tech and semis. That's the big focus for today. The tech and semiconductor sector making up over 20%, 21% of the S&P 500. Not showing weakness yesterday early is your hint going that came into today. The great volume on that one, above average for the summertime volume on that one, and one of your leaders here for the day. Oil, let's go over here. Oil finally bounced a little bit. So you got about a 3.5% gain there. Still remains that the technical pattern here, this big downtrend line, is going to be the main focus for oil, but being a little oversold in the short term with some obvious support there that people could have a good reason to pick on, found a little bit of support, so all good there. No trade news, no China news. OPEC basically came out overnight and said, we'll do whatever it takes to get the price of oil higher. And those were pretty much the exact words that they used. So a little bit of news headlines there from them, and no other negative news to try to push it down there and try to hurt them. So with the price of oil a little bit higher, you got a much needed bounce here in the XOP, about 3% on the day. It did not make new 52-week lows today, which it has been doing nearly day after day there. And then XLE, about 3% as well. Just an oversold sort of sell-off there in an out-of-favor sector. It's an aggressive buy for those people that went in there and took a shot to do that. That takes some guts in there. And so that's that one. We talked about rates already, starting to rally there towards the end of the day, hinting at tomorrow that not being able to be that blow-off top, sort of get to new highs, everybody's excited sort of thing. I'd be absolutely shocked if that happens, whether you're looking at bonds or notes. They all did basically the same thing there. A lot of talk about Germany and what they said overnight. And let's move on here. There you go. Healthcare stocks right back towards this support line. So I just like drawing these things for people that like to look at this. You got great uptrend support here. It's a sort of a wild, looking area. You can't argue with that. So kind of a wild thing going on there. Are we maybe frozen a little bit? So hopefully that fixed it. I'll try it again in a second. But healthcare looking pretty good, holding on to the uptrend there. And then EWW and EEM was a focus that I thought I'd point out there. Just that waterfall sort of drop, recovering a little bit, and not too bad there. So all looking good there. Are we stuck? Yeah, it's stuck. Good. Well, actually, good timing. It kind of made through all of this stuff here. After hours, you got Uber reporting, holy cow, they lose a lot of money. Man, Uber loses a lot of money. So they lost, just last quarter, $5.24 billion. CEO came out and said, hey, we definitely see that this will be a break-even / profitable business one day. But whoa, good thing Lyft reported earnings yesterday, right? Because they would have got crushed on that news there without us knowing that Lyft actually did really well. Anyways, Roku higher on the day as well. Beat on earnings, beat on revenue, raised guidance, all of that good stuff there. And as far as new highs on the day, you got 37 new highs. It's basically everything that was there yesterday. CME Group 3 days in a row now. Your REITs, your extra storage space, public storage space, American Tower, Welltower, HCP, all hitting new 52-week highs again. And Tyson, by the way, if you look at Tyson, still enjoying that energy / excitement from people that realize, hey, Tyson's going to go compete with Beyond Meats and Impossible Burgers and everything. Who would have thought? And so getting a little excitement there. Also a technical breakout if you like looking at that. Only 2 new lows to speak of. That's Kraft Heinz, hit new lows, earnings, and then A Biomed. I don't really talk about those, but A Biomed still working off their horrible earnings miss there. So not too bad. In general, the key is just focusing on what to focus on to set your expectations. And when you can do that, well, you could sleep at night or have fun looking at other stuff, All right, if you have any questions, I'll be happy to try to answer them for you. Otherwise, we'll wrap it up because we've got our class tonight with our focused on the nest egg there. I'm looking forward to that one. And that'll be at 8 o'clock Eastern, by the way. If you're one of our customers, you should have gotten only one email this week for that class. The link is in the email, by the way. Cool. Uber, unfortunately, yeah, that's you can't you can't find really much good there. It's back all the way down to that support area from just the other day. It's as if this week never happened for Uber. A little bit off the lows there, right around 40 or so. So it's coming back a little bit, but yeah, just a really troublesome earnings result. And probably people overreacting a little bit initially because of what's good with Lyft. It's kind of like when American Airlines has good earnings and then United Airlines, or better yet, remember Kansas City Southern when we did the railroads there? CSX reported pretty bad earnings. Everybody hits Kansas City Southern. Well, then they report earnings and things are good. And we go, oh, it's CSX's problem. It's not an industry problem. Well, so that's not good for Uber there. So, sheesh. Dustin, did you see any pattern of A machine buying today? It was real smooth buying all day long. Oh, you mean like the algorithm type buying? It was a very slow, consistent, uptrending day. And you could almost even see on the chart throughout the day, you got just tick by tick moving higher. And then as we got into the day and bonds started to rally, you could see the market just go, wait a minute, are we really trying to move higher? Now we closed at highs, so that's not a bad thing. But you could actually see, look at like a 5-minute chart of the market. Everything's good, good, good. Bonds start rallying, uh-oh. And people realize that. So that's got to stick out to you if you're an active trader. If you're a long-term investor, you don't, you're like, oh, whatever, it's another day. But if you're active, you've got to catch those sort of things and see that kind of weakness there, or at least hinting at potential weakness. Zach, Dustin, what do you use for your stock statistics? Also, do you have a subscription in your private classes? Or you have to be a client to get access? So we actually just buy the data, right? So we're working on, and this is nowhere near complete, but we're working on actually letting customers be able to do that as well, where we can just compile all the data and you one day will be able to say, I'd like to know on this stock how often it beats on earnings and what happens and things like that. I just have something in my head that after using everything that's out there, I just kind of think I kind of see a way that may make sense. So spend a lot of money on data. I mean, a lot of money. Actually, if you go in the dojo right now, the NASDAQ data is off because they changed their whole thing. We have to redo a whole thing with them and kind of re-up our deal. And so that's down technically at the moment. But yeah, we just buy the data there. Oh, in the private classes, I don't mean for them to be private. How actually that started was, number one, I wanted to do more for customers, make sure they know I'm here and I love this stuff and I don't go just like golfing every day or ever in the last 3 years. But it's because we get really specific. I tend to say things that are ultra specific that I'm allowed to say to customers because I know them and know if something's suitable, but I'm not allowed to say it to the general public. There's a rule, it's called the suitability rule, that if you want to stay in good graces with the SEC, you can't specifically make a recommendation to someone that you don't know if that recommendation is actually suitable for them. And because of that, we sort of hide that class to make sure that we don't get in any trouble. I don't want to get in trouble. Yeah. You went with the banks today. Yeah, banks got a little recovery today. So when you have tech and you have semiconductors that are showing you that hint, you know that final piece to the puzzle is banks. If you've got tech and you've got banks, you have a rally in the market. It can't be any other way. The only thing that could hurt that is if healthcare cratered. If for some reason banks and tech were higher on the day, but healthcare absolutely crashed one day, that would be enough pressure to pull the S&P down on the day with those other two sectors still higher. But, that's it. I saw the comment from Ray Dalio saying, buy China. He had a lot more to say than just that, so don't just take that headline and go do what you got to do there. It's a volatile market. I mean, no doubt. If you're going to participate there, the Chinese people are exposed to more volatility than us in the U.S. could ever possibly handle. That's just the way they move, whether it's their property, whether it's their stock markets. Wow. So you got to be ready for that. That was aggressive, I think, for him to say that to the general public, given that most people can't handle the volatility we see in our markets. How sensitive are preferred stocks to interest rates? Yeah, they fluctuate, no question about it. Depends on the stock, depends on, there's a difference between like Tesla and Verizon, you know what I mean? But they definitely fluctuate, yep. And have I ever used Icon? I would love to. Pricey, it's money. But yeah, I would love to do that. I actually like their report distribution service that they have there, where I'd be able to build an entire report off of my data and then just share that. I absolutely love it. Why aren't all financial advisors rich and retired? Because they're not financial advisors. Those who are rich and retired are somebody else. They did something else. You don't do it for the money, right? I mean, it's not one of the, unless you're really good and like you go and work at like, Goldman Sachs or something, and you can hunt down the really wealthy people. I just have a different mission. It'll be fine. I don't look at this in terms of going and hunting down the wealthy. I want to help the beginners. And if at some point we have a lot of, newer, younger investors, and then we have some of the larger retirees as well, that's cool. I just see it as keep it fair, Bob thinks Mr. Dalio is talking his book a little bit. That's been known to happen. Gary says, you skipped me, brother, asking how commitment of traders go higher on sluggish earnings. Am I missing something? What are you looking at? Like specifically, where are you looking? Kevin gets it free in college. I'm going back to college. It might be cheaper to go back to college and get the free license than to actually buy the license. Kevin's got it right there, man. Woo. Are REITs too high to get into now? REITs are tough. I can't say like, oh, you shouldn't buy them here. I'm not allowed to say that, but I could say it's a very tough area of the market. Not only very sensitive to what's going on, but man, they've had a really good run. And it's really hard for me, it's really hard to jump in on something that's had such a strong run. You may feel differently, but it just, come on. For this year so far, where are we looking at? Oh, that's the wrong button. Let me see. If you look at something like, ICF or FREL, you're looking at 25% gains on the year. So I'd really study that and try to see if something in that REIT category is already up so much, how often does it really blow off a top and give me another 10% or so? Should I start to participate small in that to participate there, but look for those declines to try to buy? That would make me feel better, but I can't tell you what to do. You know what? I see what you're trying to get me to say, and I remember you trying to get me to say your screen name. So just because, I'm not going to say it. Is it, so you hate, you guys talking about the REITs? Roku, yeah, we talked about Roku both yesterday and today a little bit. Boy, you can't argue with Roku in not only what's happened this quarter, but I keep thinking back to that analyst that just absolutely nailed the call for the best stock of the year. He called Roku his best stock pick. Just killer, right? 20% all in one day. That's now 250+% this year. Am I wrong? That's got to be over 250 at this point. We're pushing 300% gains on the year. If you miss that boat, you trying to chase it and jump on the boat there? Are you? You trying to do that? I would also have questions about, a lot of Roku users are using those TCL screen TVs. Those are made in China. Don't we have sort of a trade war thing going on? I would wonder if maybe that starts to eat into what they're doing. I haven't researched it enough, but that just comes to my head while I'm rambling. Richard says, you only manage retirement accounts. You also handle we do. So all types of accounts, we do. The only things that we don't help or that we can't manage for you directly would be any account with a number in it. So I put it that way. If you want a taxable account, if you want a joint account, Roth IRA, IRAs, we of course manage all of those for you. If it's a 401k, I'm happy to help you with it. I'll help any customer with their 401k make those decisions. I just can't physically do it for you. So we don't charge or anything for that. That's just something I want to help with everybody. Yep. Well, CVS could really use a boost, right? So, so far they reported that the whole Aetna thing was going well for them in their earnings yesterday. And maybe that's the start of this bottom here, but for at least the latter part of, or what is the latter part of this year so far, it's sort of been dead money, right? It reminds you of the small cap stocks where it's been flat, dead money. Come on, please bounce. Maybe this is the start of that bottom there. I think it's aggressive. It's hard to do, but could you? Yeah, absolutely could. Coming to Florida and you want to buy me pizza. I do like pizza, and really if you ever know where we're at, it's very industrial. So like all my neighbors make fun of me because like I'm the guy that shows up in regular clothes. They've all got their like working clothes on and stuff. And So the only place around here is actually, it's a pizza place. It's really good. I'm just saying, it's really good. So if you do plan on doing that, I can eat some pizza now. What's a good sleeper pick for tomorrow? Couldn't possibly begin to address that question without getting in trouble. You're not going to take me down. Well, silence. So you got Trump. Did he get to Jerome Powell? I think he kind of did in that last one because there was no data at all to suggest that a rate cut was necessary. So for them to call it the insurance cut and all that stuff, sure feels like Washington got to him. We'll see. Kroger's been beaten down. Figure is comparable to Walmart. Kroger is actually now fundamentally has done pretty well. I know they're making major adjustments there. I think they've gotten the short end of the stick here this year so far. I did a video on how to buy bottoms if you want to try to do something like that. I'm not saying you should or can or anything, but you know, I would just say I think they got the short end of the stick given how they're doing there. That seems to be a discount to me. What are the main differences between holding bonds and bond ETF besides the obvious one? Well, there's a lot of popular ones these days that are focused on the whole laddering, people that like the municipal bonds and things like that. You got to be careful there because just to say, oh, here's a bond ETF, I'll participate, you really want to know what's inside. What's the meat and potatoes of what's going on there? Because there are so many of them now that there are really hyper-specific goals for each one of them. BlackRock has a series of laddered bond ETFs. I thought that was kind of interesting because if you have someone who has a lot of bonds, there's a lot of call risk there. There's just a lot of stuff going on. It could be a nightmare for either someone managing that account or even a retail person who's trying to keep up with all that. So in things like that, I kind of like it. Careful. You want to understand how they break down the different tranches there. What's the goal? I mean, what's the goal of these ETFs? You got to do a little research there. Generally, that's a tough question to answer, and I only say that because it's one of those areas of the market that's got so much attention lately that these companies are coming out with bond ETFs that are, I mean, interesting, but getting more and more difficult to understand. That I feel bad for people trying to decide there. I have a feeling there's a lot of people that buy those not fully understanding what's inside of them. I've missed whatever the question was. I hope that answered the question. All right, a couple more and I'm going to wrap it up here. Do you panic when the market really tanks? How do you get your customers how do you get your customers out of positions? I think that's what you're asking there. So no, I don't panic when the markets fall. I actually like investing really aggressively. I hope they fall. I sort of cheer for that. If you're a younger investor, you really want a discount. You don't care if the markets go higher. You want to buy cheaper, right? So I spend a lot of time educating on why we want the markets to fall. And then for how do you get out of positions? I'm not going to get out of positions just because the markets fall. There's no timing involved in that respect. Anybody who can't afford to take certain levels of risk, we've already addressed it, right? So those people are already positioned. So if the markets fall, they're not going to crater with the market. They know what risk they can take, and we've already made that adjustments. I'm a big believer in do stuff ahead of time. I always tell people ahead of time, not, oh, I told you so, or, oh, I'm sorry, right? That's a big one, right? The second I do something after the fact here, you guys will bash me, right? So I have to be one step ahead all the time. And so that's the short answer there. Customers that can't take the risk, we've already adjusted, diversified, prepared, and sort of put them in the right mix there. If you can take risk, then I hope the markets fall. I hope they fall tomorrow and the rest of this year is just a horrible year and we all get to buy the discount and it stays down so we can all buy a lot cheaper. So that's that one. Yeah, so you got it there. Financial investors, nailed it. You got it. Bob's on it, man. That's cool. I think we'll wrap it up there. Sorry for the little issue there. Let's try it again. No, it's not showing the charts for some reason. We'll get that fixed before tonight because we've got our class tonight at 8 o'clock. If you're one of our customers, I hope you'll join us there, or be sure to watch the replay if you get a chance and you want to use Nest Egg. If you don't have Nest Egg, by the way, and you want it, you got to email support, right? Don't email me. Email support if you're one of our customers, and we'll get it all linked up and kind of put up together for you so we can geek out a little bit tonight. Grab a glass of wine. We'll see you here in a little bit. And hey, for the rest of you, thanks for watching. I appreciate it. And we'll talk to you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.